What's happening, traders, and welcome back to Shifty FX with another outlook here. So looking at DXY, we can see this month has started forming this aggressive down move, which is brilliant for us because if in the next 13 days we can get a monthly close, giving us a swing formation here with that confirmed swing formation down there, we have our cemented dealing range. Okay, so a few points of interest that I'm interested in over here is this monthly POI. Just below that, this monthly POI. Okay, so these could be potential targets going forward. If we get a strong bearish candle close, like I said, within the next 13 days, we would look to target that low and start targeting internal range liquidity. Okay, back down into our discounted range. If we go ahead to the weekly, you'll see we had our cemented swing over here. Cemented swing over there, giving that a confirmed dealing range, and we will see that market traded into premium. Okay, came back down. Traded into discount, pushed back up into premium, failed to break and target that high, giving a strong close to the downside. At this point, like we keep on reiterating every single video, using our two candle theory, this was our immediate draw. Reason being, the previous week's high was taken, candle closed below that low, and it was easy for us this week understanding that we were going to look to target that low. Market has now taken that. Okay, so if we go weekly draw, market has taken that weekly draw on liquidity and closed below that low. Now, again, we just move that as our new target. This is our lowest hanging fruit. This is all we're looking to capitalize on. If we can get market to push towards this, most of our work is done. Okay. Once this gets broken below, we can look on the daily for those continuation models and potentially targeting this swing drawn liquidity here. Now, I'm giving you one scenario. Can market push, wick up, and respect this demand zone over here? Absolutely. Okay, we've just traded back into it. We've now, and this is something we use. You can see here, it's a bit of a void on this side. When we see a strong impulse up and there's a void over here, market will tend to generate its own liquidity, take that and can push up. Okay, now I'm not saying that's going to happen. I'm just saying it is something we look out for. So keeping that in mind, we could potentially see that act as this range liquidity. This inducement, market take that weekly low and then push up, targeting this high. But if we see a strong continuation down, daily candles on the lower time frame giving us good indication that they are still significantly bearish, we'd look to target this monthly area of interest. Okay. With that being said, let's have a look. Our immediate bias now is sell bias. Okay, we bearish in the market. Now, if we take this, for instance, you'll see from this point, if we backtrack a little bit, just looking at the daily, we had a market structure shift just over here. Okay, market structure shift. What was the high that broke that low? Right up here. Okay. So that is your protected high now. Not this high. This is your protected high. This is giving you a good indication that we are still bearish. We take this information, we draw on our dealing range. You'll see that market's pushed up aggressively, targeted this extreme supply over here. All right. Not saying we could trade this. This is just making an assumption. We're basing on the rejections. Okay. So we have a strong rejection candle off of that. Understanding that we've pushed into premium and failed to break above and take that external range liquidity, we've respected it and closed down. We could ride that momentum. Market has then pushed up again, all right, and then pushed down aggressively. Our immediate draw this entire week was this low. All right, looking at this information, as soon as we started seeing these candle closes, we capitalize on sells, sells, sells. And it was that easy, guys. We've had market tap below now, closing below this low, making this our next draw. That combined with the weekly, we would look to immediately say, okay, so that's going to be our daily draw on liquidity. But now that we've going into Monday, we could see a potential pullback. Okay. So market has closed up a little bit. We go to the, well, let me mark this in. So this is our daily POR that we're looking at. All right. We have our overlapping supply over there. Okay, so it overlaps with that imbalance. So all I'm doing is drawing it to the wick. If there's no overlapping imbalance, I tend to draw it on the bodies. All right, so we have our supply zone there, impulse down, markets continuing. Where can we look for market to trade towards? Well, our immediate draw is that we could potentially see an immediate reaction or open and push to target that external range liquidity. I would prefer to see Monday and potentially Tuesday form the high of the week and then target that external range. That would be the ideal scenario for us. Okay, so go ahead over here. See, we have a nice swing over there. It's brilliant. It makes your fair value gaps a lot more higher probability, I should say, when you see a distinct swing like that forming. So we have our buy side. If we go the 1 hour, that would stand out a lot more. Okay, nice. So all we're looking to do, guys, given this outlook, is target towards the downside. So potentially, like I said, we could still respect this fair value gap and push down, but what I would like to see is draw into that internal range liquidity on the daily. Tapping into this imbalance, this is our point of interest. This is where we want to target. This is where we want to execute from. Targeting this daily. Monday, ideally closing like this. Tuesday, tapping in, pushing down. That ideal scenario, but we're just putting a play in what we could potentially see if Monday opens up and immediately targets here and gives a strong reaction. Again, Monday we could look for a drawback under the Asian range and target that. Come Wednesday, we could see a strong bearish candle close to the downside. Then all we're doing is waiting and targeting our intra-week liquidity. Okay, and this is how we play it, guys. We're just trying to put scenarios in play. Right now, you can see market has printed bearish imbalances, disrespecting bullish imbalances, and showing its hand. This is all we're trying to capitalize on. So right now, undoubtedly, we are sell bias on DXY. With that being said, let's jump on to EU. Fantastic push. Okay, I understand that this is our swing high to swing low on EU. Market then failed to take that external range liquidity, pushing into the extreme of this demand. Okay, let's see if you drop to the lower time frames. There's your sell before the buy. Markets tapped into that, respected it, and pushed up. Looking at the weekly, where do we see some clean draws, drawn liquidity? That swing, and immediately our weekly draw on liquidity. Strong bullish candle close, that's what we're looking to target. We have a nice swing, drawn liquidity over there. And then ultimately, if that gets broken and closed above, we would look to target this next swing, drawn liquidity. All right, how can we get to these points? Let's have a look on the daily. All right, so daily, what do we see? We have this demand zone over here that market has disrespected, okay? Pushed above, strong aggressive move to the upside, creating imbalances to the upside. All right, so we have this level to work with. Nice, clean, strong impulse. Friday capitalized on a buy. Thursday capitalized on a buy. Took multiple buys this week. So we pretty much just used our 2-candle theory to ride that momentum, and understanding that what the previous day has printed, we look to capitalize on the next day. Could see that drawback, like I said, on DXY, ideally pushing into that daily POI, okay, or retracing deeper once Monday potentially prints over here, tapping into this demand and continuing upwards. We look at the 4-hour. Do we see any more potential? No, that's a nice 4-hour swing area over there to target. So that's our sell side liquidity. And on the 1-hour, do we see anything? No, just pretty clean from this perspective, guys. All I'm looking to do is just see how Monday can open. If I see it pushing down, carrying on with that momentum from the back end of Friday, I'm going to look to sell into this area. This is how I play it. I'm going to look to see what the market does during the London session, showing its hand, giving us the momentum for the day, capitalize on some sells. If I see some momentum to the upside, respecting this imbalance, I'll look to ride the buys and target this external range liquidity. But it comes down to how the market opens, okay? If anything, I would love to see a tap into this, continue up, targeting this external range liquidity. That's an ideal scenario. All right, so exactly the same as DXY. EU, we're looking for the buys, DXY sells. We head on to GU, see over here, strong bullish candle close to the upside. Lovely momentum, exactly what we've been waiting for. This imbalance being respected, entire body closed below, but that was the gapping process. Okay, so gapped below, then respected. Immediate draw on liquidity there. Daily, same thing. All right, so this is my weekly draw on liquidity. Where can we capitalize and ride that momentum? It would have to be from this POI. So there's my daily. This is my protected low in the interim. Okay, this is what I want to see protected. So market comes in, taps into this, can use the wicks because it's overlapping now. So there's my demand zone. Market drops down, pushes up, looking for market to tap back into this level. Ultimately, where we could potentially see market rally towards is this swing all the way to the upside. That's your extreme, okay? But in the interim, we have multiple swings to target. We have that level and that level to the upside. Let's drop down to the 4-hour. Yeah, you got that 4-hour within there. And if we have a look over here, our clear swing. That's our sell side liquidity. Lovely overlapping imbalance that we want to see market draw towards. Okay, here's your demand zone, unmitigated, pushed above, left some fair value gaps. So we've got some internal fair value gaps within this higher time frame one that we could see market respect to a dime, tap in, close up, whether it be Monday, Tuesday, has to show us that wick rejection or that rejection candle, and then we know this would be our next draw to the upside. All right, traders, you can see how simple we keep it, straight to the point, just understanding what the market is doing using our 2-candle theory. You'll see there, we've had the previous day's candle close above, but this has given a significant wick down, okay? And when it leaves an imbalance like this coming into the new week, you would ideally want to see it target this, okay? Now, when I say we want to see market show its hand, I'll give you an example. So when you opening up your charts and you can see early hours before you've started trading, okay? We want to kick off at about 2 o'clock. Right there, you can see that market's pushed down, taken liquidity already, all right? And this should give you a good scenario. This is where you're trying to do your data collection in the morning. So you've got about a good hour to try and assess the market, see what's happened, and make a call from that point. But here we can see market has swept external range liquidity out of our trading hours. Does this mean it's going to come back? Well, it's unlikely, but it can. We've tapped into a fair value gap that has that liquidity. It's starting to rally to the upside. over here we see our change in state. Okay, market then closes above. Then we have our market structure shift over there. And all we need to do at this point is try and capitalize on our trades. You'll see here on Friday, we actually got a lovely trade, understanding that using the same theory over and over, we have a fair value gap. All right, at this point, it's 6 o'clock, so we're not trading. 5 o'clock, we cut off our trading. 6 o'clock comes in, London lull, not doing much. What happens during New York? We see a London session, because London session spans from 2 to 7. Your kill zone is 2 to 5. The London zone is 2 to 7. Okay. 7 o'clock opens up New York. See a strong rejection. Swept liquidity, engulfing candle. Again, the trade. Then all you've done is ridden the momentum for the day. You've managed to take your 2R or 1R like we do and call it a day right there. Okay, understanding that we've had an impulse, pullback, impulse, waiting for your New York kill zone. Where's your New York kill zone? 7 o'clock. All right. The New York session trades from 7 to 2 New York time. But you understand that from 7 o'clock to, I would say, about 11 o'clock is the latest you want to be trading New York. Then the market dies off substantially, just like the London lull does. Okay. And there's your trade for the week. Done. All right. So, like I said, guys, we are buy bias on EU, GU based on DXY with sell sentiment in play. Like I said, wake up. Let's see how London is respected. We've put a swing high in now. We do have some fair value gaps that market could target and respect immediately. But I would most likely want to see a tap into this daily POI or imbalance and then rally to the upside, taking the external range liquidity being the previous week's high. All right, traders, safe trading this week, and we'll catch you later. Cheers.